Ladies and gentlemen, good day and welcome to the Tribhovandas Bhimji Zaveri Q2 FY23 earnings conference call hosted by Dickinson Intellinetics Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sonam Raghuvanshi from Dickinson Intellinetics Private Limited. Thank you, and over to you, ma'am.
Thank you. Thank you so much. Good evening, everyone. I welcome you all to the earnings call of Tribhovandas Bhimji Zaveri Limited for Q2 and H1 FY23. Today on this call, the management of TVZ Limited will be represented by Ms. Benisha Zaveri, Whole-Time Director, and Mr. Mukesh Sharma, Chief Financial Officer. Before we started, I would like to remind you that the remark made today might include forward-looking statements and actual results may differ materially from those contemplated by forward-looking statements. Any statement made today on this call is based on our assumption as on date. Now I would like to hand over the call to the management. Over to you, Benisha. Thank you.
Good afternoon, everyone. I welcome you to the Tribhovandas Bhimji Zaveri Limited earnings call for Q2 and H1 FY23. Thank you for joining us here today. To start with the financial performance front, we are delighted to announce a quarter demonstrating robust growth. The company experienced improved footfall and sales traction this quarter backed by the festive season. We saw a 17.8% revenue growth in Q2 FY23 and 71.8% in H1 FY23, confirming the return of discretionary demand in a post-COVID era. In addition, under our ongoing plans for growing our footprint responsibly, the company recently launched its brand new store in Kalyan, Mumbai in October. Through this launch, we are now also present in another highly prolific micro market blessed with a density of aspirational customers. During Q2 FY23, the company implemented several marketing initiatives towards garnering higher traction from the seasonal demand derived from the wedding and festive seasons, which have historically proved to be strong months. Our marketing initiatives included promotional offers like no making on diamond jewelry and blocking gold prices. We also launched new wedding sets and a strong festive collection to take advantage of the upcoming wedding season. To support this, we implemented sharp promotional advertisements through digital and social media campaigns featuring the renowned actor Sara Ali Khan. All these initiatives resulted in increased footfalls of more than 55,000 customer walk-ins during Q2 2022. Furthermore, we are focusing more on online customer engagements and are also planning to use online platforms and social media to attract more customers and grow our consumer base. Going forward, we remain in an expansion mode, and through our various initiatives, we are optimistic for the upcoming quarters ahead. The company's key focus will continue to be on acknowledging and reciprocating customer loyalty, increasing market share by expanding our customer base, and penetrating into untapped jewelry markets by opening new stores. I thank you all for joining us on this call today. I would now like to hand over the call to Mr. Mukesh Sharma, our CFO.
Hi, thank you, Benisha. Good evening, everyone.
Participants kindly be online. We'll have to reconnect the management line. Thank you.
Vinaysa.
Mr. Sharma, kindly proceed.
Yeah, thank you, Vinaysa. Good evening, everyone. I would like to begin with the key highlights for quarter 2 and half year ended FY22-23. I will first read out the quarter numbers and then half year numbers for ease of reference. In quarter 2 FY23, revenue numbers achieved is rupees 537 crore vis-a-vis rupees 456 crore in quarter 2 FY22 with a YOY growth of 18%. In quarter 2 FY23, gross profit achieved is rupees 59 crore as against rupees 49 crore during the same period last year with a YOY growth of 18%. In quarter 2 FY23, EBITDA achieved is rupees 23 crore vis-a-vis rupees 21 crore during the same period in last financial year with YOY growth of 10%. The EBITDA percentage in quarter 2 FY23 is 4.2% as against 4.5% during the same period in last financial year. In quarter 2 FY23, profit before tax achieved is rupees 7.6 crore vis-a-vis rupees 9.1 crore during the same period last year. The PBT margin percentage in quarter 2 FY23 stands at 1.4% as against 2% during the same period in last financial year. Now I'll read out half year performance of the company. In first half of FY23, revenue numbers achieved is rupees 1117 crore vis-a-vis rupees 650 crore in the first half of FY22 with YOY growth of 72%. The gross profit achieved is rupees 119 crore vis-a-vis rupees 73 crore during the same period in last financial year with a YOY growth of 64%. The EBITDA achieved is rupees 41.4 crore vis-a-vis rupees 19.8 crore during the same period in last financial year with a YOY growth of 210%. The EBITDA percentage to revenue stands at 3.7% as against 3.1% during the same period in last financial year. The profit before tax achieved is rupees 11.6 crore vis-a-vis a loss of 3.5 crore during the same period last year. The PBT margin percentage is 1.4% as against loss of 0.5% during the same period in last financial year. I would now like to invite everyone for a Q&A session.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Participants who wish to ask a question may kindly press star 1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Please press star 1 to ask a question. We will wait for a moment while the question queue assembles. The first question is from the line of Sagar Shah, an individual investor. Kindly proceed.
Yeah, thank you for the opportunity and congratulations for the good set of numbers. My first question is, what is our online sales strategy and what percentage of sales we are expecting from the online platform?
Hi, thank you, Sagar. We are working to be present on the online. Right now, we don't have any online sales on the product side. Yeah, we have the online presence for our Concall promotion scheme, which is doing very well. Long term, for any healthy online business, any company would target somewhere around 20% of the revenue to come through the online channel. Rest assured, we are working on the online to be live very soon in coming quarters.
So is it something like that through a website we will be doing online or through some channel partner?
No channel partner. We are working to be offer the online presence on a IT platform, which will be company driven.
Okay. And my follow-up question to that is like, what kind of competitive intensity you see for the online channel?
Online, there is a different strategy. If you see the competition, every other competition is there in the online, but the quantum of sales they are generating, I'm not sure how much. What I see is mostly into the gold coin category or maybe a lower ticket item. From a strategy perspective, the entry level product would be more sellable in the online platform rather than big ticket items. It is a more marketing strategy from gaining a customer share, or maybe in a low ticket item product offering. We are also working in the same line as the other market players are working currently.
Okay. So how do you see the online sales for the quarter, and what are the margins for online sales? Are the same as store sales, what are your plans for further expansion of online sales going ahead?
Yeah. So as I updated to you, we do not have online presence of our product sale except for the Kalpavix scheme. There are various things you can do on the online, as I said, as a marketing strategy to gain a customer share. Or you can also sell through your gift cards. You can also sell the low ticket items. So we are working on all these lines and hopeful that very soon we will be available online also.
Okay. Thank you.
Thank you. Participants, if you wish to ask a question, please press *1 now. The next question is from the line of Nagendra Gupta from South India Investor Group. Kindly proceed.
Thank you very much for the opportunity, sir. Hearty congratulations for the profitable quarter once again. Here my question is, sir, in the IPO 2012, you have promised that a 43 showrooms will be opened to the 14 existing at the time. Till today, you have only 32 showrooms. The prospectus clearly stated that these showrooms will be opened within a span period of 2 years. Now it is already 10 years past. What are the reasons for this, sir?
Thank you, Mr. Gupta. We were already at 44 showroom a year back before COVID. Okay, as you know, the COVID, everyone knows what had happened during the COVID, and as a prudent business strategy, we had cut down the stores from 44 to 33 as on today, and we are consistently looking out for business opportunities for the expansion.
Sir, you are telling me about the last 2 years, but this is 10 years, sir, already.
Yeah, so we were at 44 stores 2 years back before the COVID, and during the COVID we had rationalized wherever basically in all the mall stores wherever we were present, we had cut down as a cost saving strategy, and as I said, we are working towards opening of the new showrooms into newer markets. We have already opened 1 showroom in this financial year, and we are looking for a few more showrooms to open in the coming quarters.
One more question, sir. The revenue got almost doubled if you compare since IPO days. Gold price too raised almost more than doubled. But the shareholders' share price has come down to about 50%. The markets are good, in good shape. What are the reasons behind this, sir? Is it something business model or what it is?
See, the numbers are available. It's a public listed company. Numbers are available to everyone. As far as the share market is concerned, it is market driven force which decides the price. You know, you can also see in last 6 months the share has gone up by 40%. Yeah. So what I see is the share prices is how investors views the company in the longer term rather than not for the past performance. The investors are seeing the values and that's how they are investing into the share prices. I would not like to comment much on the share prices. As I said, it's decided by the market. And as far as the numbers are concerned, it is available to everyone. The fundamentals of the company is very, very strong. Company is on a growth path, which is visible on in the numbers also. And that's it. I mean, nothing more I can offer on this.
How many showrooms more we can expect in this current financial year to be opened, sir?
Sorry, repeat your question, please.
This financial year, how many more showrooms are expected to be opened?
Yeah, so we have opened one showroom and we are looking for 3 more showrooms in this financial year.
Thank you very much, sir.
Thank you. Participants with questions, kindly press star 1. The next question is from the line of Surendra Shetty from ISR Investments. Kindly proceed.
Yeah, thank you for the opportunity and congratulations. My question is, sir, what are normalized EBITDA margin? What is the gross margin breakup for the studded and plain gold jewelry for the quarter and 9 months?
Mr. Surendra, I don't have a readily available data for the studded as well as gold separately. In the normal scenario, for the exact numbers I don't have. In a normal scenario, the studded margin ranges between anywhere between 15 to 25%, and for the plain gold, it ranges somewhere between 19 to 15%. So the gross profit margin would be falling in between somewhere there.
So what will be the EBITDA margin for this plain and gold and studded jewelry?
So as I said, we don't have calculation product line wise on the EBITDA side, because there are lots of costs which needs to get allocated. So as I said, the normal gross margin ranges for the studded is between anywhere between 15 to 25, and for the plain gold jewelry, the normal gross margin ranges between somewhere 19 to 15%.
Okay, got it. And I just want to know, we have recently launched one branch in Kalyan, and can you throw some light on what is the company strategy, and how would the company impress better penetration in the state we are already present, or are we looking to expand in newer geographies?
Yes, we are planning to expand into new geography as well. Coming back to Kalyan, we are very excited to see the kind of response we have got in the Kalyan showroom. The sales were very, very good during the first month. And as far as the expansion is concerned, we are very hopeful to open 3 more new stores in the coming 4 months.
So 3 new more stores in particularly Kalyan only or somewhere else?
It will be completely new geography. We are looking one store in Gujarat. One more store we are looking into 2 stores in Gujarat and 1 store in Rajasthan.
Okay. So any plans we have to target the south area for the expansion?
We are looking at newer markets in South India. The work is on there.
Okay, plans are already in.
Yeah. We are studying the market in couple of important cities of South India.
Okay. And my last question is, sir, what is the ideal inventory turnover as a company you are targeting both for diamond jewelry and gold jewelry, and what is the strategy for the same so that we can improve the turnover ratio?
Yeah, so I think very good question, Mr. Surendra. See, for gold jewelry, the ideal inventory turns would be somewhere near 3, and for a diamond jewelry, it ranges between somewhere 1.5 to 2. We are already at around 2.2 stock turn of the gold jewelry, and for diamond we are already at 1.5 turns of the diamond jewelry, and we are consistently working to improve the turn of the gold and diamond jewelry.
Okay, so you meant is 1.52 times, no, of the turnover inventory?
Yeah, 1.5 times of diamond jewelry we are already achieved. As far as the gold jewelry is concerned, we are already achieved 2.2. And we are looking to increase it somewhere around 2.5 then to 3.
Okay. Thank you so much. Got it.
Thank you. The next question is from the line of Kalpesh Agarwal from Lloyd LLP. Kindly proceed.
Hello. Is my voice audible?
Yes, sir, it's audible.
Yeah, I have a couple of questions for the management. So, as we understand, we are into the business wherein it's highly dependent on the gold. We want to understand that what is the company's policy per se will be, wherein it makes a business model more resilient to the gold prices, and we do not take the sharp hits when it comes to the volatility in the gold prices. Some of our peers have been able to withstand those volatility in the gold prices. I mean, we'll be really glad to hear that. Is there any thought process behind the company wherein they are, besides one could be, the more and more studded jewelries, wherein the diamonds share keeps on increasing. Besides that, any other thing? And my second question will be, as we see that a store been opening has been after some years of gap, want to understand that what could be the material difference between the new store which you have opened now and the shop which you have shut down earlier, barring the malls one. So what could be the difference if I want to say that this store is 2.0, the second version of it. So what could be the material changes in terms of financing is concerned, the store size, the design? What could be the prima facie difference? I mean, we're happy to hear that from you, sir.
Okay. Hi, thank you, Mr. Kalpesh. As far as the gold price question is concerned, in India there is no hedging mechanism which is available to hedge the gold fluctuations. Okay. We don't want to gamble anything on the gold prices, since there is no official mechanism of hedging the gold prices in India right now. So gold prices, we are hedging our sales on a natural hedging basis. On whatever sale we do, we keep booking the rates of the similar quantity, so that there is no gold fluctuation prices hits to our margin. Though in a short term, the movement of gold prices does impact the margin, but on a long term basis, since the similar quantity we also buy the moment we sell, the hedging mechanism of natural hedging of to the extent of sale is taken care of. So that's what on the gold prices. I am not sure which other player you are referring who is doing the hedging in the gold, in absence of any official hedging mechanism in India right now.
Sir, I mean, I guess it's completely wrong what I might have told you. I'm not trying to hedging something like that. What I'm trying to say, can we make our business model more resilient to the gold price movements? I didn't say hedging it. I want to say that at the end of the day, I mean, there are many other companies besides the jewelry companies who try to make our business model more resilient to that, avoid that volatility. We are seeing too much volatility in our margins per se, right? When we say some of the peers, their margins are not that volatile as compared to TBCs are concerned. So I want to understand that, is there any mechanism wherein we are giving a thought process to where we can reduce the volatility in margins going ahead, sir?
To my mind, the gold prices movement will hit the margin, and it does hit margins of every other retail players. The depth of inventory may insulate to some extent, but that depends how much inventory who carries and what is the stock turn they are working upon. As far as the TBZ is concerned, we are very clear that we want to play at a very optimum inventory level with our optimum sales, and the gold prices movement does hit in a short term, but in long term it gets paired up. That's what to my mind comes to. I would be welcoming if you have any other thoughts, you can share offline, and we will be definitely working upon that.
Thank you, sir.
As far as your next question on the gold studded as well as the pure yellow gold is concerned, I think it's more driven by the market. it's more depends on what consumer demands, and we work accordingly what consumer wants. So the ratio of the studded as well as the yellow gold varies from each region and each stores. So it is not the same inventory spread will be there. So if you pick up the Kalyan store, the inventory spread will be very different if you come to the Zaveri Bazaar store. The designs and all would be to the top notch. However, as you see and go and see the inventory in Kalyan store, it will be more from a local taste what the locals buy out there. And as I said, there's a lot of work goes behind that. The team works day in, day out before opening of any of our stores. And there's a lot of market study, customer taste and demands. A lot of study goes around that, then only we open the store. So this also partially answers to your question in terms of the presence in the mall stores as well as high street store. I think in a vicinity, whether you open into a mall store or you open into a high street store, the consumer demands remain the same. The mall store has a footfall, the ready-made footfall available. However, the brand pool what TVZ carries, it does not make much difference for us except for the cost model, which would be definitely different than what is available in the high street store and the mall store. Right. Other than that, I think product mix or the store design, everything remains static for us.
Right. So when we say that we opened a new store, this is the change which TBZ has implemented new, or when I wanted to understand that few of the stores which we closed down in the new store which had opened, what is the prima facie difference? Are we following the same strategy? If that is the case, then the chances of those new stores opening up is the similar probability of making the same profits which we were making earlier. So I want to understand that is there any new strategy when opening up the new stores, sir?
The strategy as far as the product and spread and all these things concerned remains same. As far as the cost model, as I said, the cost model for the mall store as well as the high street store is very different. During the COVID, during the first 2 years, everyone is aware the kind of restrictions the government has put on the operations of the mall was very different than the high street. The kind of cost we were incurring in the mall store and the high street store were very different. So as a prudent businessman and as a prudent business strategy, we had taken a call wherever the cost was very high, vis-a-vis compared to what profit we are going to gain from those stores, we had shut those stores, and largely mall store came into the ambit of the closure.
And sir, if I can ask you the last question, if I'm allowed to do that, sir, to take your liberty of asking one last question, sir. Even when we're trying to understand that we have not changed our say offerings for a long period of time. We have been positioning ourselves as a wedding jewelry player for a long time, and so is there any calibrated approach we are taking by, say, introducing a new products, for example, those jewelry watches, or in terms of, say, any particular product we are targeting, like, say, bracelets which are high margin, or say rings which are high margin, or say necklaces. I want to understand that in terms of getting into more detail in terms of products offering. How do we trying to get more into market share? One is number of stores, but in terms of product perspective, are we targeting is the right way of looking at the thing, sir?
Yeah, I think when you get into the detailing of the product, what is being sold at respective stores, as you said, you have touched only one side of it onto the inventory, which particular product category is getting sold. We also look into the different weight range. We also look into the diamond and gold ratio. So there's lot of.
आपण कॉल करत असलेल्या एअरटेल नंबरनं आपला कॉल होल्डवर ठेवला आहे. कृपया लाईनवरच रहा किंवा.
Can you proceed, sir?
Yeah. So there is a lot of work goes in the deciding of the product category, and as I said, this goes store by store. We also look into the weight range wise which particular product is getting sold. As I said earlier, it is actually driven by the consumer. So what consumer exactly wants, there is a lot of interaction with the consumers. We work and basis the consumer demands in a particular region, we accordingly do the product offerings.
Okay. Then what could be a ticket size, sir? And any change in ticket size we are targeting, or we are keeping the same, ironically, the same ticket size which we were offering earlier? Ticket size could be in terms of gold prices, but I'm talking about in the grammage-wise ticket size.
Yeah, so we have seen a slight increase into the ticket size, approximately 5%, I can say. We have seen the increase in the ticket size.
On the volume front, I mean, bearing the gold price movement, you meant to say that, sir?
Yes, yes.
That's it from my side. Thanks a lot, sir. And it was great interacting with you.
Thank you
very much.
Thank you. The next question is from the line of Neha Sharma, an individual investor. Can you proceed?
Hello.
Yes, ma'am.
Good evening, sir. Congratulations on the good set of numbers, on the top line numbers. I just have a couple of questions. So, what are the reasons for our margins being so suppressed for the quarter?
You are referring to the gross margin?
Yeah, gross, EBITDA, PAT.
Okay. So I think gross margin largely remain into the same range what we have achieved into the last year same period as well. However, we could have seen a much better gross margin had the gold rates not gone down during the month of September, which was little bit has impacted on the margin side. As far as the EBITDA and PAT is concerned, we had incurred a good amount of marketing expenditures, which were picking up because of the festive was preponed in this financial year, vis-a-vis last financial year. Last financial year, Diwali and Dasara was in November and October. This financial year, Diwali was in October, as well as some part of the Navratra was in the month of September. So we had to prepone a lot of our marketing activities, and which has actually added to the cost, and because of that the margins has gone down, EBITDA margin and PAT margin.
Okay. So one more question. So what are your various market activities you have done in the quarter? Can you throw some light on that?
Yes, madam. I think if you see our various marketing activities, July we had done a diamond no making. In the month of August, we had run some flat 50% off onto the making charges of the gold jewelry. We had launched Mangla collection, which is a new collection especially for the South market. It's more on the temple jewelry collection side. In the month of September, we had done a pre-booking onto the gold rates. We have done the festival offer of flat 399. In the South market, we had launched as the lowest gold rate plus flat 30% off on making charges. We had there was a offering from the State Bank onto the cashback of 5,000 on shopping of rupees 1 lakh and more. So there were various kind of marketing activities which were done in the quarter 2.
Okay. And one last question, sir. In terms of a gold loan, where are we standing right now, and what are our aspirations for the future?
So gold loan is a mechanism of getting the buying the inventory. So gold loan, you want the exact numbers or what?
No, sir. Will you just throw some light on that?
Yeah, so see, gold loan mechanism that we buy the gold from the banks largely, and whatever is the old gold which customer sells to us, that is the only two mechanism we buy the gold from. And the mechanism of buying of the gold is from the banks is through gold metal loan, which comes at a very, very cheap rate as on today. So these are the only two mechanisms we buy the gold from.
Okay. That's it from my side. Thank you and all the best, sir.
Thanks.
Thank you. The next question is from Rahul Rathod, an individual investor. Can you proceed?
Yeah, hello. Good evening, sir.
Good evening, Rahul.
Sir, can you share a revenue guidance for next few years, and do have any big capex in line in coming years?
Yeah, Rahul, I can share a picture for this financial year. As I said, around 3 stores we are already in pipeline, And as far as the capex is concerned, approximately 2 crore to 2.5 crore per store is the capex goes, which gets financed through our internal accruals. As far as the revenue guideline is concerned, we are working on the same store growth. There are two ways to increase the revenue: is inorganic and organic. We are consistently working to increase the revenue from each of our stores, plus as well as increase footprint into a newer market. As I said, 3 stores are already in pipeline, and for the next financial year, the various market studies already in pipeline, which is going on to identify newer markets where we can expand.
Okay, sir. Okay. Thank you, sir.
Thanks.
Thank you. Participants, if you wish to ask a question, kindly press star 1. The next question is from the line of Viral Shah, an individual investor. Kindly proceed.
Good evening, sir.
Good evening.
Okay, so what are your plans for brand promotion expansion going forward? How much percentage of sales you have target for the brand promotions?
Sorry, Neeral, can you repeat your question? I couldn't get.
What your plan for brand promotion expenditure for going forward? How much percentage sales you have target for brand promotions?
Hi. So Neeral, as I said, the marketing cost ranges between somewhere between 2 to 3%. Yeah.
Okay.
For Q2 specific, we have incurred a marketing cost of around 2.4%. See, in India, it is the festive falls in different months, and the marketing cost also spreads accordingly. So the marketing spend may not be directly comparable from a quarter-to-quarter perspective, but on an overall number, when you see, the marketing cost ranges between 2 to 3%. This depends on the situation of the market, the situation onto the gold prices, situation on the customer sentiments. So there are a lot of factors which works around it, and accordingly the marketing cost as a percentage varies from market to market. As far as how much revenue is coming directly through the marketing spend, there is no such mechanism to monitor that. But yes, marketing does play a very important role in terms of achieving a particular sales number.
Okay. Thank you.
Thank you. Participants, if you wish to ask a question, kindly press star 1. If you wish to ask a question, you may press star 1 now. As there are no further questions, I would now like to hand the conference over to the management for closing comments. Mr. Sharma, over to you for closing comments.
Yeah, thank you so much, everyone, for coming to this conference call. If there is any question which remains unanswered, I would encourage you to write to the company. We would be more than happy to answer your questions offline. Thank you so much.
Thank you. On behalf of Dickinson Intellinetics Private Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.